Okay, let's unpack this. When we talk about global energy, our minds often jump straight to, the big offshore oil rigs or these vast, sprawling refineries. But what about that absolutely crucial link in between? The unsung heroes on wheels, right? These enormous crude oil tank trucks moving vital resources across, well, pretty vast and varied landscapes. Today, we're taking a deep dive into the global crude oil tank truck market. Our mission really is to explore the past, the present, and what's projected for the future of this vital segment. We'll highlight key regional contributions and some surprisingly different growth rates, all based on the latest industry data we've pulled together for you. So, starting with the big picture. This isn't just about numbers floating in space. It's about the engines driving global energy, quite literally, the global market. It stood at over, $331 million back in 2021. And listen to this, it's projected to grow to over $449 million by 2025. And then a really significant expansion to more than $824 million by 2033. That works out to a robust compound annual growth rate, CAGR, of nearly 7.9%, almost 8%.
Yeah, and what's really fascinating here, I think, is that this isn't just sort of organic growth happening in a vacuum. It's propelled by these very practical, almost foundational demands of our energy supply chains. I mean, you've got increased oil consumption globally. That's a basic driver, right?
Hmm.
More demand means more movement. Then there's the expanding refining capacities we're seeing worldwide. More refineries mean more raw crude needs to get from the source to the processing plants. And finally, and this is critical, the growing need for flexible crude oil logistics across all sorts of different terrains and distances. And this is really where tank trucks, they shine. Unlike pipelines or rail, which are pretty fixed infrastructure, trucks offer this unique adaptability. They can go to varied and changing delivery points. That makes them indispensable in a lot of scenarios.
Right, you've really hit the nail on the head there. It's those foundational demands, that flexibility you mentioned, that make these numbers so compelling. Now, to really get the nuances, we need to, get down to where the rubber meets the road, so to speak. Look at the individual regions. And what we find there are some fascinating, quite varied stories of growth across the continents. Let's start with North America. It remains a, significant powerhouse in this market. This region is projected to more than double its market size by 2033. Driven by a strong, 7.47% CAGR. The United States naturally continues to be a dominant player there. Over $108 million in 2021, projected to $254 million.
A big chunk of the market, yeah.
Definitely. But what's interesting, I think, is that both Canada and Mexico are actually showing even stronger growth rates within North America. Both are exceeding 8.3% EGDHR,
Sure.
which suggests, quite a bit of activity and perhaps investment in those specific markets. Canada hitting over $43 million by 2033, Mexico nearly $20 million.
That is interesting. It points to maybe specific extraction projects or logistical needs intensifying in those countries relative to the U.S. base.
Exactly. Okay, shifting across the Atlantic now to Europe. Here we see pretty steady growth overall. The market's expected to more than double its 2021 value by 2033 as well, maintaining a GGR of about 7.45%, very similar to North America overall. Now, within Europe, the pace does vary a bit. You've got the UK, Germany, Russia, Spain, seeing solid but slightly slower growth rates, sort of in the mid 6% range. However, France is definitely showing stronger momentum. Their CGR is up at 8.57%. That's quite a jump, reaching nearly $34 million by 2033. And Italy isn't far behind, around 8% in CDGR. But here's a really intriguing detail, I think. It kind of hints at broader regional development. The rest of Europe category, it's set to nearly triple its market size by 2033. It boasts a really robust KGR of over 9%.
Wow, over 9% for rest of Europe. That's incredibly compelling. It suggests that while the major economies are expanding steadily, there's significant, maybe less visible infrastructure development happening, or perhaps new resource demands popping up in, other nations within that broader region.
Yeah.
It points to a highly dynamic, evolving energy landscape beyond just the big headlines, where these flexible transport solutions, the trucks, are clearly stepping in to fill new gaps.
That's a great point. It's not just the usual suspects. And speaking of dynamism,
No.
if you're looking for where the real, high-octane energy is, all eyes are on Asia Pacific. This region is just exploding. It's set to nearly triple its market value by 2033, and it achieves the highest regional KGR globally, over 9.1%.
Really leading the pack then.
Absolutely. And within APAC, India truly stands out. It leads with the highest regional growth rate, over 10% CGR.
10.
Yeah, effectively tripling its market from about $11 million to over $34 million. China and Japan are also seeing very strong expansion. Both have impressive KGRs around 8.7%. China heading towards $52 million,
Japan over $41 million. And we see other high-growth contributors too, like Singapore over 10.7% CAGR,
Yeah.
and Southeast Asia as a block over 10.2%. But here's the real kicker.
Okay.
The rest of APAC category.
Yeah.
It boasts the absolute fastest KGR across all regions we're looking at.
Yeah.
An astounding 12.29%.
12.3%. Wow.
Think about that.
That's
Projected to grow from less than $1 million in 2021, about $800,000, to over $6 million by 2033. That's not just growth. That's, well, like you said, an explosion in demand.
Yeah, when we see that kind of acceleration, especially in a restive category like that, it really raises an important question, doesn't it? What's driving such a concentrated surge in these potentially diverse, maybe smaller economies? Could be new industrialization, maybe a push for energy independence locally, or even shifts in global supply chains, creating new distribution hubs we haven't focused on before. It certainly tells us the landscape of energy demand is far from static. It's constantly shifting.
Absolutely. Fascinating stuff happening there. Okay, shifting south now. Let's look at South America. Another region showing, well, surging potential. Its market is expected to nearly triple its value by 2033, too, with a robust KGR of almost 9%, 8.98% to be exact. Brazil is, unsurprisingly perhaps, the largest single market there, growing from about $7.3 million to over $19 million.
Makes sense.
But look at Argentina and Colombia. Both are demonstrating incredibly strong growth. Projected KGR is around 9.7%, 9.8%, basically doubling their revenue by 2033.
So similar to the Canada-Mexico story in North America, smaller players showing very strong relative growth.
Exactly. And much like we saw in Europe and APAC, that rest of South America category is also set to almost triple its market size, hitting over $24 million by 2033. Another area to watch. Okay, finally, let's turn to the Middle East and Africa. Critical emerging markets, obviously. The Middle East, projected for steady growth. The CGR is over 6.3%. We see consistent expansion across countries like Saudi Arabia, Turkey, UAE, Egypt, Qatar. The UAE showing slightly higher momentum within that group, around 7.4% CAGR.
Still solid growth, if not quite the explosive rates of APAC or parts of South America, reflecting perhaps more mature infrastructure in some areas.
Could be. And then Africa. Its market overall is demonstrating a solid CGR of over 8.1%, valued at nearly $6 million in 2021, expanding to over $16 million by 2033. Nigeria and South Africa are the top contributors there. Nigeria projected over $3 million, South Africa over $5 million by 2033. And again, that rest of Africa segment, also robust, projected to nearly triple in size by 2033 with a KGR of 8.6%.
So that pattern holds across multiple continents, the rest of categories, showing really strong growth, indicating widespread development or changing logistical needs. You know, if we try to connect all these dots now, step back and look at the bigger picture. These widely varying growth rates across continents, they're not random, are they? They clearly reflect massive infrastructure investments in some areas, significant industrial expansion in others, and crucially, these shifting regional energy demands we've talked about.
Right.
These are the underlying forces really driving the need for more flexible logistics, like tank trucks, across incredibly diverse geographic and economic landscapes. It just highlights the continued and I'd say evolving importance of ground transport in the whole global energy supply chain.
Yeah, it really puts it in perspective. So what does this all mean for you, the listener, trying to make sense of this? Perhaps it brings into focus those sort of hidden engines of our global economy, right? Those vital industries we rarely think about day to day, but without which so much just grinds to a halt. The crude oil tank truck market. It isn't just expanding globally, that's clear. It's undergoing these really dynamic regional shifts, and it's driven by crucial factors like infrastructure development, industrial needs, and just evolving energy requirements.
Indeed. And I think the takeaway is while those traditional markets, say North America and Europe, maintain steady, consistent demand, the exceptional growth rates we've just discussed in regions like India, Southeast Asia, parts of South America, parts of Africa, that truly indicates evolving global energy pathways. And it underscores the critical, versatile role these specialized transportation solutions, the tank trucks, play. It's a powerful illustration, really, of how the world's energy demands are actively reshaping our logistical infrastructures.
That's a great way to synthesize it. Which leaves us with a final thought, perhaps. This raises an important question, doesn't it? As the world continues to evolve its energy mix, with renewables and transitions, and also just basic infrastructure development, how might the role of these essential transport links, these tank trucks, shift or transform over the next decade? What new demands will they face? And based on these trends, which regions might emerge as the next surprising growth hubs we'll be talking about in 5 or 10 years? Something to think about. Thank you for joining us on this deep dive into the global crude oil tank truck market. Welcome to the Deep Dive. We're here digging into your sources, like we always do, to unpack some key insights. And today, it's all about a really crucial, but maybe often overlooked, part of energy logistics. We're talking about the crude oil tank truck market. It's fundamental in moving the world's energy, even if it doesn't always get the headlines.
Absolutely. And, understanding this market is actually pretty vital for you. Its efficiency, its health, it really does ripple right across global supply chains. It even affects energy access in ways you might not expect. So, yeah, today we'll break down what's driving growth, what's holding it back, and the trends that are really reshaping its future.
Okay, so let's unpack that. Their role is crucial, you say. What are the main forces really pushing this market forward right now?
All right, well, to start, let's look at why these trucks are just so indispensable. First off, you've got increasing global crude oil production. Simple as that, almost. Countries like the US, Saudi Arabia, big players in Asia, they're not just maintaining output, they're often expanding it. And critically, they're pushing into, well, more remote areas sometimes.
The remote areas. That's where pipelines might struggle, I guess.
Exactly. That's where these crude oil tank trucks become like a lifeline. For some of these isolated drilling zones, places where pipelines just aren't feasible, maybe the terrain's too tough or it's just too expensive, well, trucks are the only practical way to connect them to refineries or export terminals. They keep the crude flowing where, other infrastructure just doesn't exist yet.
That image of bridging the gap is powerful.
Yeah.
How significant is that reliance? Are we talking a huge number of operations depending solely on trucks?
Oh, it's massive.
Mhm.
I mean, think about a big discovery somewhere tricky, like parts of the Permian that are still opening up. You could easily need hundreds of truckloads a day just to get that crude to the nearest pipeline hub or maybe a railhead. And that flows right into the second driver. The lack of pipeline infrastructure, especially in emerging markets.
Right.
In a lot of developing energy sectors, pipelines are either underdeveloped or just plain absent. Building them takes huge capital, takes a lot of time. So in those situations, tank trucks aren't just like an option, they're often the only option.
The only viable way.
Often, yeah. The only viable, cost-effective way to get oil from the wellhead out to the market. They offer flexibility that pipelines just can't, especially in really rugged areas. They literally make production possible where, permanent infrastructure is still years away, maybe decades.
That flexibility, that really stands out. And I suppose that agility is also vital for meeting, well, the huge energy demand we're seeing globally,
Mm-hmm.
especially in cities.
Absolutely. That's the third big driver right there. The rising demand for energy in urban centers and industrial zones. You've got rapid urbanization, industrial growth, particularly across Asia and Africa. And that means you need reliable, timely energy supplies like never before. Even where pipeline grids exist, they don't always reach every new industrial park, every growing suburb.
So the trucks fill in the gas.
They fill that critical last mile gap, yeah. They keep supplies moving without interruption to these energy hungry areas that aren't fully plugged into the main grid yet. Their ability to deliver when and way needed, it's crucial for preventing disruptions, for basically fueling growth.
Okay, it's clear they're essential, indispensable, as you said. But it can't all be smooth running, can it? What are some of the biggest hurdles, the roadblocks holding this market back?
No, definitely not all smooth. One of the biggest, maybe the biggest, is just the sheer volatility in crude oil prices.
Mm.
When prices crash, exploration slows, drilling slows, and that directly hits demand for transport services. It's a classic boom and bust cycle for this market.
Right, feast or famine.
Exactly. Trucking firms, especially the smaller ones, they face some really tough choices. In downturns, maybe they have to park expensive trucks, let go of skilled drivers, or just operate on razor-thin margins, sometimes even below cost. This unpredictability, it makes it incredibly hard to invest confidently in, say, expanding the fleet or upgrading technology. Long-term planning becomes, well, really risky. It's a big reason the market's so fragmented, lots of smaller players just trying to survive the swings.
You mentioned the smaller operators. How does that price volatility hit them specifically compared to the big guys? Do they cope differently?
That's a really good point. The larger operators, they might have deeper pockets, maybe more diverse businesses so they can weather the storm a bit better. Sometimes they even buy up smaller firms that are struggling. But the smaller guys, they often rely on shorter contracts, tighter margins. They're much more vulnerable. Their coping mechanisms are usually more immediate, like deferring maintenance, putting off buying new trucks, maybe even pausing operations. It's tough.
Okay, And on top of that, economic pressure.
On top of that, you've got the stringent environmental and safety regulations, and rightly so, I should add. I mean, transporting crude oil is inherently risky. It's flammable stuff. So governments everywhere have strict rules on operations, on emissions, on safety compliance. These rules are vital, absolutely, but they demand serious upfront investment.
What kind of things?
Specialized tech, advanced driver training, constantly updating vehicles to meet new standards. And that can be a huge barrier to entry, especially for smaller firms trying to get started or just stay in the game.
That sounds like a constant financial pressure, especially for those smaller outfits. The ongoing costs must be significant too.
Precisely. Which brings us nicely to the third major constraint, just the high operating and maintenance costs. You're looking at substantial ongoing expenses. Specialized equipment needs specialized servicing. Fuel costs fluctuate wildly. You need skilled drivers, often with special licenses. And now there's this growing need for advanced tracking safety systems. It all adds up.
Inflating the budgets.
Right. It inflates operational budgets further. And these financial pressures, they don't just squeeze profits. They can genuinely slow down efforts to modernize fleets, particularly for those mid-sized companies that might not have easy access to big capital for these, critical upgrades.
Okay, so quite a few challenges there. But despite these hurdles, it sounds like the market isn't exactly standing still. What are some of the maybe transformative trends you're seeing that are redefining things?
Yeah, it's definitely not stagnant. And what's really interesting is how technology is stepping in to tackle some of these exact challenges. A major trend is the deep integration of telematics and advanced fleet monitoring. This isn't just basic GPS tracking anymore. We're talking real-time engine diagnostics, sophisticated monitoring of driver behavior.
Like how they're driving.
Yeah, things like harsh braking, sudden acceleration, even how long they're idling. Plus, hyper-specific stuff like tire pressure sensors, fuel levels in real time. This kind of detailed data lets operators find inefficiencies they just couldn't see before. Maybe a certain route always adds extra miles, or they could spot a potential engine problem before it causes a major breakdown out in the middle of nowhere. It's really turning maintenance from reactive to predictive. Proactive.
That level of data must be a game changer, both for efficiency and, I imagine, safety too.
Absolutely, on both counts. And running parallel to that, there's this, well, it's still quiet, but it's a growing shift towards eco-friendly fuel and hybrid tankers. Sustainability is becoming a bigger focus everywhere, right? So more logistics companies, more manufacturers, they're looking into cleaner options. Things like LNG, liquefied natural gas, or CNG, compressed natural gas, and various hybrid engines too.
Hybrid crude oil tankers.
Yeah, it's still relatively early days, but they offer real cuts in emissions compared to standard diesel. It's a direct way to tackle the carbon footprint issue. And you can expect this trend to increasingly influence how new trucks are designed and built, and how older fleets might get adapted, to meet climate goals.
That's actually quite surprising, hearing sustainability becoming such a focus here in a sector so linked to fossil fuels. What's driving that pressure?
It's coming from a few directions, really. You've got regulators, obviously, but also pressure from consumers, from the public. Plus, companies increasingly have their own corporate environmental targets, and investors, too. ESG factors, environmental, social, governance are a big deal now. Companies see it partly as future-proofing, managing long-term risk.
Makes sense.
And then finally, another big trend is the expansion of oilfield services and drilling into even more remote areas. Exploration keeps pushing the boundaries into terrains that used to be considered just too difficult. Offshore, deserts, jungles. And this directly fuels demand for really rugged, all-terrain crude oil tank trucks.
So not your standard highway tanker.
Definitely not. These are specialized machines built to handle harsh conditions, cover huge distances with heavy loads, navigate really tough landscapes. As companies keep exploring untapped reserves, places like parts of Africa, Central Asia, South America, well, designing and deploying these specialized trucks becomes an even more critical piece of the puzzle for fleet planning and innovation.
Okay, fascinating. So pulling this all together, what does it really mean for you, our listener, and maybe for the broader energy picture?
Well, for you listening in, I think what's clear is that this crude oil tank truck market is navigating a really complex space, but one that's also full of opportunities. With global production rising, with pipelines not covering everywhere, especially in key growing markets, and with energy demand from cities and industries just continuing to climb, the role these trucks play, it's more critical than ever. Absolutely. And yeah, despite those serious challenges we talked about, the price swings, the tough regulations, The market is definitely not stuck. You've got these powerful tech advancements like telematics changing the game and this emerging shift towards, greener options. It all points towards, well, a promising dynamic future for what is truly an essential part of the global energy supply chain.
So for you, here's a final thought to maybe chew on. As the world keeps grappling with climate change and that push for electrification gets stronger and stronger, what could the long-term future look like for transporting crude oil itself? And how might that eco-friendly fuel trend we mentioned accelerate? Could it go beyond just hybrid options for these vital trucks in the coming decades? Something to ponder as you keep watching the ever-evolving global energy picture.